And welcome to the NRW Virtual Investor Conference. I'm Andrew Gagan from Ausbiz. Great that you can join us. Today, we're going to hear from Credit Clear, which is an Australian receivables management solution provider that has developed a proprietary digital billing and communication technology platform. This helps businesses drive smarter, faster, and more innovative financial outcomes by changing the way customers manage their payments through a user experience that the market demands in a digital age. Credit Clear manages more than 350,000 active customer accounts across a range of industries, including transport, financial services, government, and utilities. And in the first half of financial year 21, Credit Clear reported 280% growth in revenue from clients, with more than 70 clients across multiple sectors added during that period. In a moment, we'll hear from the company, but just a reminder that if you would like to ask questions, please do so by typing them into the Q&A panel on your screen. Well, now my pleasure to introduce Brenton Glaister, Chief Executive, and David Henshke, Group General Manager. Over to you.
Thanks very much, Andrew, and thank you everyone for taking the time to learn a bit about Credit Clear. Today, I'd first of all just like to introduce myself, Brenton Glaister. My background's been for the last 35 years in receivable management. I was the person that started a company called National Credit Management Limited. It's now part of the Credit Corp Group, and always been involved in this style of industry. It's been a very exciting time for us to join Credit Clear a few years back and work on the technology with them that is having some incredible results, which I'll certainly share with you in a second. Joining me today is a fellow by the name of David Henshke, who's our Group General Manager of Strategy. He looks after a lot to do with our risk side and also our development of our platform. So I tend to spend a lot of time on client development. David spends a lot of time on systems development, and together we create a pretty good team to bring this business to our clients. Most of what Credit Clear is about is really around the psychology of a consumer. You probably understand that a lot of people spend a lot of time of the psychology of a consumer when they buy something. We work on the psychology of a consumer when they need to pay for something. So we work out what's the best way, the nicest way, the quickest way, and the most cost-effective way for a consumer to engage with us and to basically pay their account. So we've had some wonderful success, and we are probably at the right time with our product, bearing in mind that we've just gone through COVID, where everyone's wanting to talk more around digital processes, and we've also just gone through banking royal commissions and essential services commissioners and these types that have put more restrictions on I suppose customers getting harassed on the phone by telephone calls and by letters. Our business structure is quite simple. We are able to communicate with customers at a very low cost. It only costs us a couple of cents to send an SMS, and it only costs us, it's pretty well free for us to send an email, whereas in the past it used to cost us $2.40 minimum for a phone call and $1.20 minimum for a letter. So if you just consider the numbers of that, we've gone to a very minimal cost where over 90% of our revenue goes straight to the bottom line once we've got our costs covered. So it's quite successful. Over the last year, as Andrew alluded to, we've had some quite good growth through the COVID period. So our revenues are up 280%. Our communications have increased quite dramatically by 152%, and we've had those new clients. But the main thing, and anyone that's seen our presentation before, is we predicted that come January 1, when a number of the restrictions were lifted by the Essential Services Commissioner, that we would be we'd have a lot more work, would be the easiest way to put it. So that has happened in the period of January, February, and pushing definitely into March, which has even got busier. We're not only winning new clients, but our existing clients are sending us through work that is now sometimes up to a year overdue. So instead of collecting a debt that might have been for $500, that same debt is now a couple of $1,000. And based on how we go about our business, quite often we're charging a percentage of a debt. We charge on success. So instead of now charging on a $500 at, let's say it was 10% and earning $50, now we're doing that on a $2,000 debt and earning $200. So what we're finding is we're having a significant uplift in communications, a significant uplift in recoveries. We're having a very good, we're getting great feedback from the consumers we're actually asking for money from. Dave will tell a little bit about it, but we've got a net promoter score that's running at 45, which is pretty crazy for a business in our industry. And generally, we're actually being sought after by many of our clients now to extend our services not into the receivable management, but right up to the front end of communicating with the customers at day one, which I can tell you a little bit about as we go along. And I know we're pretty short for time today. Of recent times, we've signed up contracts with Clean Heat, Gypsum, I think it's called, Water, Colavan Water, had some new contracts with Southeast Water. Water Corp's doubled their volumes, and Witherson decided they wanted us to be their key client. AGL, BMW, just to name a few. So we're not signing up, small businesses. We're signing up enterprise clients that we've always dealt with, over the years. And the outcomes for them have been quite exceptional, and that's really helping our revenues. Our revenues, just so everyone's aware, through that January and February period are now 40% up from just from last year, 3 or 4 months ago. So we're really starting to, even though we had a reasonable year last year, we're really starting to ramp up those numbers. So pretty well covered where we are here. At the moment, the key thing I think is we have running at a revenue of about $5 million a half. That is certainly increasing. As I said, we're seeing a 40% increase in BAU type stuff coming towards us. EBITDA was a loss in the last half of $2.78 million, but you need to bear in mind that also included our IPO costs and a lot of advisory costs that were through that process. So we have a goal to, our first goal is to break even. We're not a company that wants to burn a lot of money, but we certainly want to get to our stage as quick as possible of breaking even. And we believe that's at a number of about $1.5 million revenue per month. And at the moment, we're probably getting around that 1.1. Maybe we'll be pushing that 1.2 soon. So we're getting closer to that break-even point, which is extremely important for us. We have plenty of cash to get us through the short to medium term. We have $12 million in the bank, so we don't have a problem with having to tap anyone on the shoulder and for additional investment. A lot of our clients, and I'll just share a couple of quick things with you from our business update. This year, we've had a massive increase in utilities work. To give you an idea, in the last 8 weeks, we compared it to the 8 weeks of 2020. 2020, we had 16,000 new accounts, and this year we had 28,000 new accounts, 170% increase. Last year, the debt amount was $8 million. This year, it's 33. So what I'm saying, there's a lot more larger debts and a lot more debts coming in. So that was an increase of the 280% we're talking about. And the debts have gone from $500 last year to an average of $1,100 this year. So that does give us more money to collect, which is more revenue and more communications. We also have started to work on the insurance side of the business. So when I say insurance side of the business, it's we've put on a business development person to work with insurance companies to provide a service to them. We're hoping to come to you quite soon to say that we've been very successful in that area as well. And we're also looking at the education area. We're going to initially approach all the private schools, and then we'll look at state schools. But we do have a service that's very seamless for schools, and it's all ready to go and up and running. And we've beta tested it. We've taken on 6 schools, and we see that there's a great opportunity for that sector to use our services as well. At this stage, what I'm going to do is I'm going to pass you over to David. He's going to have a little bit of a chat to you about the size of the opportunities in the Australian market, maybe a little bit to do with the international market. And then he'll talk to you a little bit more about the technicalities or the technical aspects of our product. So over to you, David.
Yeah, thank you, Brendan. And it's great to be able to speak to you all today about our technology and the exciting developments at Credit Clear. We're certainly disrupting the traditional receivables management market. First, I'd like to remind you how big the market is. Now, traditional debt collection companies share an approximately 1.5 billion in annual revenues in Australia alone. And the size of the global opportunity is obviously far bigger than that again. Now, looking at the Australian market, approximately 900 million is earned from purchase debt ledgers. Now, we've stated this previously, Credit Clear is definitely not planning to purchase debts. However, our technology is currently being used by several ledger purchasers. And, somewhat surprisingly, we've achieved some good collection results, even from some very aged debt. Now, Credit Clear's focus area is really around the $500 million annual revenues earned in contingent collections and BPO services. Now, we're working with companies across all 4 tiers, each with different levels of sophistication in their receivables management, and hence require different solutions. Now, what is missing from this slide, however, is the estimated 2 to 3 billion of costs associated with internal collection teams. Now, Credit Clear is just starting to create new markets here where several clients are actually implementing our solution earlier in their process to reduce their own internal costs. So the actual TAM for this market is significantly bigger than what it's seen on the surface just for collection companies. Moving to the next slide, I'd like to spend a little bit of time summarising our growth strategy, which is really built on 3 pillars to help you understand and contextualise where we focus our investment and efforts. Now, the first pillar is expanding our digital technology to reach more customers. Now, this is all about providing more digital communication channels and payment options for consumers, whilst ensuring all the regulatory and compliance obligations are covered. Now, the second pillar is about developing content and delivery capabilities to better engage customers. Now, this is where we're developing our AI, our machine learning and strategy manager and behavioural science capabilities. Now, these first 2 pillars are all about delivering the right message through the right channel at the right time. Now, the third pillar is all about finding transformational opportunities to leverage our technology and then executing well on this. Now, case in point, about a bit over 12 months ago, we purchased Credit Solutions, a traditional debt collection agency, and our focus has been converting their traditional client base to digital, as well as using that channel to capture new clients. Now, this is proving particularly successful with like Brendan said, some of the revenue we can see significantly improving over the short term. So we'll continue to look for these opportunities. Now, we'll also be looking at other transformational opportunities, such as expanding internationally through licensing, joint ventures and acquisitions. And already we have an agreement with a US-based company called Remitter. They've spent the last 2 years building the functionality and rails to operate across all US states, which is heavily regulated, as well as Canada. They really only started generating revenue in September. However, they're starting to see a strong pipeline building, which is fantastic. We'll also look to create new markets. For example, using our technology to collect the millions of low-value debts that were previously unviable to collect using traditional methods, as well as replacing the internal collection teams I mentioned previously. Lastly, Credit Clear will look for opportunities to leverage our technology into adjacent areas such as billing and pre-due date payments, and we're working with several clients now in that area. So very exciting times, and all these opportunities will continue to be explored and developed through either direct investment or through strategic acquisitions. If I flick to the next slide. Now, right from the start, Credit Clear has had a laser focus on end consumer experience. We get regular feedback that it's the most intuitive, easiest to use payment app on the market. Now, using our intuitive navigation system with clear calls to action, our payment app allows consumers to choose the option that suits them whether that's paying now, settling up a payment arrangement, requesting a callback, or seeking further information. Now, it's not only Credit Clear saying we provide a customer experience, we actually measure it. Brenton touched on it before, but late last year, we introduced a Net Promoter Score into the app, or NPS as it's universally known. We've had over 20,000 people now who have taken the time to rate their experience. Now, noting, by the way, these are people being chased to pay overdue debts. Yet we are maintaining a positive NPS of over 45, which is really outstanding. Put this into context, three of the big four banks have negative NPS and all are below 10. So this really validates our superior experience our technology provides. You can see some of the great comments from users as well, typically commenting on how easy and convenient the app is to use. Looking into some of the recent functionality that we've released, the Credit Clear platform now provides a more sophisticated workflows that understand the situation with an individual customer and responds appropriately. Now, these includes the ability to dispute the payment request, the ability to negotiate by making an offer. And these new functions are particularly important in the current post-COVID incentive environment where many of our clients' customers are really struggling to pay their bills. These new functions are fully digital and completely configurable with our clients, meaning they can be turned on or off based on rules and the behaviour of individual customers. Now, over time, we will increase the sophistication and the algorithms using behavioural science, machine learning and AI to optimise the results for our clients and their customers. Now remember, Credit Clear is all about helping our clients collect their due payments, yet maintaining an enduring relationship with their customers. We're doing this by providing a great digital experience and options depending on their specific needs at a point in time. Remember that clients' needs change or consumers' needs change as their finance change and their situation change. And we work with our clients to ensure that that becomes seamless and we get the best results from. As mentioned before, Credit Clear focused on expanding our digital reach, and we've recently launched WhatsApp app as a new communication channel. Now, WhatsApp has 7 million users in Australia and allows us to provide a much richer and more engaging experience for consumers. Now, our approach is to work with clients, as I said, using real-time quantitative analysis to actually identify the best channels, the best message content, and send time for optimal engagement and payment results. Now, we've all become very familiar with QR codes over the past year. I'm not sure about you, but prior to COVID, I may have scanned a QR code only once or twice. Now, it's mandatory in many venues and certainly become part of our daily lives. Now, using QR technology, Credit Clear has made it simple for our clients to receive a payment by simply loading the QR code we provide onto one of their letters. Now, this is particularly proving useful where clients don't have the digital contact details of all their customers. We've found with a lot of our councils, they didn't have mobile phone numbers or email address to contact their customers. So this has been a great initiative and proving really successful. Now, the letter will typically go out under the client's letterhead with the QR code in the bottom right-hand corner in this example, opening a link to the Credit Clear app. Again, typically white label under the client's brand. A relatively seamless and simple experience for the customer. And my last slide is where I'd like to just emphasise our strong focus over the next 12 months to continually invest and advance the product development. Now, our technology roadmap is clearly defined in the near term as we continue to launch new features and functionalities. And being an agile organisation, we'll continue to iterate and improve these over time based on customer feedback. Now, the recent focus has been on the channel controller and the new features I've taken you through in the previous slide. As for our plan development, we're expanding our technology team to allow us to create new squads to focus on our development pipeline. We're about to start the design phase for the strategy manager module. Now, the Strategy Manager module is a very important development for us here at Credit Clear, and this is where the real science comes in. This is where clients will keep and apply the tools to run campaigns and optimise engagement and collection rates. Campaign strategies decided by data and automated by machines. Now, this will incorporate return on investment, benchmarking, and monitoring using proper statistical tools. Now, by us continuing to innovate and invest in product development, we are providing a better service for our clients, a better customer experience, and we're certainly widening the technology gap between us and our competition. Anyway, thanks for listening, and I'll hand back to Brenton to wrap up.
Thanks, David. I think I should also take this opportunity to talk about David. We're very lucky to have David join us. David was came to us after we had Marcus Price, who was the founder of PEXA. David was very instrumental in also the PEXA business, and we know the success of PEXA being, you know, a business as a fintech as well. I think I read last week that the business was looking to float for about $3 billion. Might be our largest float for a while in Australia. But look, I'll tell you a little bit about what gets me excited about this product. If we are dealing with a, let's say a medical account, and the person comes in and they're a Chinese tourist, they get hurt, they go to a hospital, and we can send them a message when they leave hospital. When they open that message through GeoNav, we know where they are. Have they returned to China? Are they in Australia? What's going on? We also know that if they have their phone turned on to Chinese or Mandarin or whatever language they're going to want, we can then start to communicate with them in future messages in their language. So what we are genuinely trying to do here is, you know, is communicate and know exactly where our market is. And we know every point they get to. We know when they click on a message. We know when they bail out of doing a payment arrangement. And this is all that psychology that we can go, you know, Brenton really likes to open his messages at 7 o'clock in the morning. He doesn't look at emails. He only likes SMSs. So our algorithms and our AI is working on all of these things to improve the customer's outcome. I will go to this point to the questions if we have any. And then I'll just give you where we see the future of our business. Over to you, Andrew.
Brenton, David, thanks very much for that presentation. Yeah, well, let's get straight to the questions. Can you differentiate Credit Clear with Credit Corp? What are the differences?
The main difference, and you know, Credit Corp's a wonderfully successful company, but the high majority of their business is debt purchase. And as David said, you know, we're not involved in debt purchase whatsoever. So we are at a different, you know, vertical. They do have a company called National Credit Management Limited, which was a company I founded back in 1990. So that is their key business that they, you know, they're a competitor with ours. But we haven't seen anything that comes out in selling a technology offering. They're more of a traditional collection agency and, you know, supporting their customers. So very different to what we are today.
Okay. Do you have any announcements as far as major contracts? Any expectation there?
We've got a couple that we're, you know, in negotiation mode with at a very late stage, and we've got some, you know, we've had some wonderful ones this year. Clean Heat Gas is one that's, you know, signed up and they've commenced work with us. We've started off with a lot more of the contingency work with AGL, you know, being an ASX 20 company. And we have a really fun partnership with some big transport businesses, not so much in roads, but in tolling and that type of thing, where we're working with them at the moment on some new work streams they're extremely large, even in our terms. So one of those, you know, is something that is only starting as we speak. So we have some really good opportunities for the future of doing work that's already in our pipeline.
Okay, David, maybe one for you. What is the percentage of revenue, digital versus traditional?
Interesting you say that. Last month was the first time that actually our digital revenue exceeded our traditional revenue. That's if we exclude our our end legal process, but we've been very successful in converting our traditional revenue pipeline to digital. So, we look forward to continue to do that. And like I said, look for opportunities where we can find, another bigger opportunities to do that.
All right. And over time, do you believe you can take business from the traditional debt collector companies, or is that likely to be more incremental?
That's the goal, and we've already started doing that, and it's what's being sought after in the marketplace now. So the more customers we talk to, and we talk to the big end of town, the whole focus is on how they talk to their customers. So I think there's a mad scramble for everyone to catch up with the 4 years of development of our solutions to come up with a similar type of offering. But I can assure you, it's quite a painstaking process, and business has already spent $10 million on its development of the product to where it is today. So we've become a market leader, and it's highly supported, to say the least, by our clients and new clients. And where our opportunity is that we will look at partnering with other traditional agencies to use our technology, or may even consider acquiring some agencies where we believe that our technology will give us a far superior outcome profitability wise, and to get clients that we wouldn't have got as quickly as we want to. But we're certainly not doing this as a roll up of the industry. We believe we can take most of the market in our own right, which we've had a pretty good background of doing.
Okay, we're almost out of time. Just one last one, and I think, Brenton, you wanted to wrap as well, but have you been in talks with any of the buy now, pay later clients, such as Afterpay or Zip?
Yeah, we currently do Afterpay's work through an agency. So one of the agencies that has a contract with Afterpay, we currently supply them our technology, and that's been very successful. We've taken on one of our opposition technology salesmen, and he's currently contacting and speaking to most, if not all, of the buy now, pay later type companies. So we have a product that really suits them because they're a fintech business that also has the data points that we require to communicate. So we've beefed up our sales team quite dramatically over the past 4 months.
Okay, Brenton, we have less than a minute left. Did you say you wanted to have final word?
Yeah, look, just really quickly, our business, Credit Clear, we've been waiting for the time when the work starts really flowing in that we thought it would. It has started to come that way now. We've seen January and February being exceptional. The news we're getting in March is following that, and improvement further. And what we see is a large amount of debt coming our way from a number of different channels, and we're in a great position to actually handle that because we can build all with technology, not with people. So we don't have to build up a lot of staff to get work done. Thank you for coming, though. Much appreciated.
Brenton, David, thanks very much for joining us from Credit Clear.
Thank you, everybody.